Let's go ahead and dive in with this. Investment giants Raymond James and Charles Schwab, they're reporting a decrease in revenues due to people moving to higher yielding money market accounts and CDs. If given the choice of high returns with high risk or reasonable returns with less risk, people are choosing the low risk route. So can being risk adverse hold you back from having the growth that you might need in retirement?
Yeah, Chris, I'm going to tackle this one to start off. That's a really good topic. And yeah, you're right. According to Moody's, Schwab suffered an 8% drop in revenues second quarter and a 21% drop in profitability. So that's a pretty big number. Also, Raymond James was down 1% in revenues and 13% in earnings. And I think a big part of that has to do with the fact that these brokerages own banks. So that big increase in interest rates that we saw through the first part of the year, we saw almost a 500 point increase in rates, and then we saw another one, a 75% increase in at the end of the second quarter in July. So I think that's definitely something to think about. Now for savers though, that does signal a good thing. I think for savers, it's actually an increase in your you get a pay raise essentially when interest rates go up. And so, but I do think it's important not to be seduced into being too conservative and not to put too much of your money into a fixed rate like that because for one thing, the point I want to make is these high interest rates might be transitory. What goes up must come down. We've always heard of that adage. And so interest rates generally do fluctuate in, cycles. And so you don't want to be taking too short of a trip with your interest rates. I sometimes compare it to like going from here to Cleveland and Toledo. That's about a 2.5 hour drive. You don't want to take a bicycle doing that. It's a long-term trip, so you want to have a long-term vehicle. So don't, think that these interest rates will stick around too long. The other thing that I want to talk about real quick, and I'm going to kick it back to you, Nolan, is the difference between investment risk or risk tolerance, I should say, and then risk capacity. So to me, the question of whether or not you should be, investing real heavily in these fixed interest rates deals with how much risk an investor is willing to take versus how much risk they should be taking or what their capacity or their ability to take risk is. And so if you're not sure about that, if you're not sure really what the difference is between risk tolerance and risk capacity, give us a call here and we can talk to you about it a little bit. But essentially, your risk tolerance is just that. It's how much risk are you willing to take? And maybe you're a more aggressive investor by nature. Maybe you're more conservative. But the capacity, Nolan, for risk, to me means, do you have enough money saved to be able to be in a conservative position? Do you have the capacity to be conservative or do you need to take the risk? Because we've talked about on the show, there's only two things that work. It's either you or your money. And if you stop working and your money's stopping working, well, where does that leave you long term?
So again, here's what Chaz talked about. It is knowing what your risk score is, and that can help answer that question. Is being too risky a bad strategy for retirees? So give us a call, 419-794-3030, and what we can do is we can get you what your individual risk score is and talk to you a little bit about, what your tolerance is for risk. We have a questionnaire where we actually walk you through a series of questions. It's similar to like going to an eye doctor. It's like, well, do you like this investment or would you rather have this one or that one, this one or that one? And based upon the way that you answer those questions, it talks about what your tolerance is, for your comfort of level of risk. And it's important to know that now because it's been our experience that it's somebody who their risk profile doesn't match up with who their tolerance is for risk that ultimately ends up making a change after something bad happens. And ultimately what that'll result in is you selling your investments at what could be a loss, locking in a loss, moving to something that's perceived to be less risky, and then missing out on the recovery of what's happening. And the second one is the exact area that you're talking about, which is the capacity of risk. So knowing based upon how to make sure that your money has the best potential to last for the rest of your lifetime, knowing what your risk number needs to be. And there's also a couple of other things that we can do when we get you your risk score is we can run it through the Retirement Riskalyze Risk Calculator. And what we can do is we can show, if you took 20% less risk, would that increase or decrease the probability of success for you achieving your goals? And because when you get to the capacity, one of the questions that you want to ask yourself is, if you doubled your money and, what would you do differently that you're not doing today versus if your money was cut in half, what would that be as an impact on your retirement? And that Riskalyze risk calculator and running that risk capacity would show you what the results are. Maybe you've got to the point where you've saved and you build up a great nest egg. It's just like football. If you're way ahead in a football game, sometimes it's, you send the third and fourth string in.
Play not to lose.
Yeah, you play defense, so maybe that's the time to run defense. But, if you're behind the game, you need to still keep going for the end zone. And so, you need to know that information. If you haven't had that retirement Riskalyze calculator run for you, that could help answer the question. I'll also give you a couple other tips. Is number one, plan for the long term. Your retirement could last decades. So, what's happening today right now in the environment, the economy, the interest rate world? Think about things and make decisions not based upon today, but make decisions for the long term. When you are looking at long term and you're, ultra conservative, you'll also have to think about the impact that things like high inflation could have on your portfolio and eroding the purchasing power that you could have in the future. In addition to that, the fact that the government continues to spend out of control and we have the likelihood of higher taxes in the future. Those areas could be a big impact on you. Number two, my number two tip for you this week is know when you're going to need the money. Short term, you might feel risk adverse. We're going to talk a lot about politics, the election this year, market results. But the reality is that's just one more event and an endless amount of events that are already happening. So short term, it's easy to get caught up into wars and geopolitical environments and elections. But long term, you got to think that stocks still have a great potential, and so you want to avoid that short-term noise. So again, one of the things to do is give us a call, 419-794-3030. Ask to get your risk score. We'll run what those numbers are for you, and we'll give you a number, actually a physical number that you can look at that measures your portfolio from 0 to 100. Then we'll spend a little bit of time talking with you about your tolerance for risk and also the capacity of the risk in your portfolio. So happy to help out as a listener of the show.
In a way that, those beds where you have your sleep score to figure out what's going to be most comfortable for you. And it's going to vary from person to person, but you want to find out exactly what it is so that you can best suit the plan or, the mattress or what have you to your needs. Finding out your risk score is as simple as picking up the phone and giving a call and scheduling a time to speak with the team at America's Retirement Headquarters and being able to navigate retirement going forward from there. 419-794-3030 is the phone number. You can also go online to the website as well, arhq.com.